IT, and I'll let you pose a question on IT to Shiv Sehgal, who's our next guest. He's joining us now, President and Head of Nuvama. Shiv, good to have you with us here. Thank you very much for your time. We had a discussion on mid-caps, small caps with two fund managers yesterday. And we looked at, I don't know if you saw that, but we had Pankaj Tibrewal and Tahir Badshah talking to us about that space. And we looked at, mid caps relative to large caps as a percentage of the total free float market cap and historical valuations and everything. You are looking at this in a different way. You're bringing in the global comparison here, and you seem to be saying that globally mid caps have not done very well, and it's an India phenomenon, and you're kind of drawing that comparison, saying that it doesn't last. Explain, Shiv. I mean, one would imagine, especially smaller companies can be impacted by local trends more, right? Larger companies, I mean, the trends are similar. What's happening in the US will happen sometime here, and I guess vice versa. But does it necessarily have to be true for some of the smaller companies as well? Go on.
So firstly, thanks for having me back. I think the last time we spoke was a couple of months back, and I was extremely bullish, and I had mentioned that I remain bullish. And the Nifty mid-cap is up like 22% since we last spoke. Firstly, I remain constructively bullish on the India space, right? I think India is going through a transformation that the likes of which we have not seen before. Putting some anecdotes to your question, I think there is no anomaly. You guys have discussed it as well. At the moment, the mid and small cap stocks now constitute 31% of India's total market cap, which historically we are at the premium levels. And, a lot of these mid caps have not seen these prices since, the peak in 2018 Jan. But having said that, I think, whenever you see a massive ramp up in a short space of time, which we have seen in the last 3-4 months in the mid cap space, there is a little bit of consolidation that is required. And to your point, absolutely, I have mentioned that, the Indian mid caps are a bit of an anomaly globally. Globally, we have seen that apart from in the last maybe 2 or 3 weeks, some EM flows have coming back into the China small cap space. But by and large, any flow that has happened in the EM space, in the small and mid cap space, India has been the forefront of it. And it's similar at the massive passive level as well. We talked about the stat that if you look at year-to-date EM flows, India has generated 50% of those inflows into the country. So while I think there is a time consolidation and the ramp up has been quite aggressive, and there is a phase that, we do feel, and I do feel that smart money will move into large caps from here till the end of the year. Not saying that, necessarily mid caps see a sell-off, but I think some consolidation is definitely on the charts.
That's interesting, Shiv. Hi, good afternoon. Surabhi here. So, okay, you've put out one sort of expectation on the table that maybe incremental money will chase more large caps, which have had a more subdued year so far. The other question that I have is that, if someone were to put in money in the market now, should that money go into themes which have already worked very well and beautifully well, whether it's CapEx, power, industrials, look at hospitality, what's happened to hotel stocks, some of these electronics manufacturing stocks, so, railways, defense. Do you stick to what's working, or is it getting too hot there, and therefore does one need to look at areas like maybe, IT, pharma, or banks for that matter, which haven't participated that much in this rally?
So Surabhi is spot on. I think it's always prudent to, especially in India, we have seen these cyclical rallies and the flow of momentum shift, from period to period. And what has worked so far is actually quite amazing. And I was looking at these stats before coming on. This year, out of the 23 subsectors that we follow, almost 22 are in the green India, right? And if I was looking at the historical comparison in 2022, 2021, there was a subsector of only about, 8 or 10 or max 13 or 14 out of the 23 that were contributing to the massive gains. This time around, it's very broad-based. As you rightly said, in certain sectors, we have seen very significant outperformance. I do feel that I also have a view on the global outlook from here till end of the year. There was a period, and I'll just give some anecdotes to this. Early August, we saw the narrative shift that, peaks have kind of, interest rates have peaked, and, bad news was seen as good news by market, and people were cheering that we are probably at the rate cycle peak. But since then, overnight, we have seen the hot ISM services index come out in the US, And even if you look at today, apart from India, which is up 50 bips today, the rest of the region is down. US was down. Europe has started down. So there is a bit of a caution built in that the rest of the year we could see the narrative shift away from that. Inflation has kind of not peaked, and the central bankers could remain hawkish for a lot more longer. And that will contribute to your point, where I do feel that the banking sector, which has not kind of performed, especially the large banks and the private banks, could see some inflows going from here. And we are, Reema just talked about the trend that we've seen in the IT space as well. So I think this could play out quite meaningfully from here till year end.
Shiv, particularly on IT, if you had asked anyone in April when we got those Q4 numbers, the big, the guidance given by Infosys, which shocked the street, that IT stocks would be where they are right now, I think no one would have predicted it, right? This rally has surprised everyone who's been tracking the IT stocks, because despite no improvement in the fundamentals, barring deal wins, there is nothing which is going for IT stocks that you can put on paper, pen and paper. So what explains that? And is it time to look at how would you view IT over the near term, say the next 6 months, and even over the 3-year period, mid caps and large caps?
So Indian IT is very different, Reema, from global IT, right? We are predominantly, you talked about the deal wins. We have a very large skill set here in the country, which of course, the most of these IT companies rely on. And the fact is that, we are seeing also a trend of, not in the supply sector, we are seeing, friendshoring and onshoring. And we are also seeing, a lot of emphasis on cost efficiency by some of the large MNCs, global players. And as a result of which, the Indian IT sector is continuing to see deal wins. And I don't think that changes in the near term. I think the rest of the world is growth starved. And as a result of which, they are, looking at, cost efficiencies and profitability as well. And that's where, the entire India game changer discussion comes into play. And I think, we talked about the infrastructure expenditure and the capex that's happening. And, it's kind of phenomenal. Indian capex was almost 11% of GDP in, almost a decade back. We have doubled that to 22%. Infrastructure in expenditure this year will see a hike of 33% to almost $122 billion. And, all these spends are happening in India. And the result of it is, global companies are looking at India from a very different angle, both in terms of manufacturing, in terms of services, in terms of IT wins. And I think, even the renewable power space, and, we've been following the G20, you guys have been doing a phenomenal job on that. There is a lot of discussion on the power sector and how India is going to shape up to all the demand that's going to crop up. And I think that's another area which I continue to believe in for the next 3, 4, 5 years. And to your point, whether we see this for the next 3 to 5 years, I think absolutely. I will come back to the point that, there are several positive trends converging for India from different sides of the business, global business ecosystem. There's demand, there's supply, there's system-wide facilitating factors. And I think all these combinations will transcend economic cycles, barring some global macro shocks. I think, even the new policies like the PLI, the digital stack, and the older ones that we implemented pre-COVID like GST, are all reaching critical mass, and they can finally reinforce each other to create a very growth flywheel for the country. So I remain bullish. I do feel that, yes, the mid-cap space can see some consolidation, and there'll be some movement back into the large cap space, especially the IT and the banking sector. We also remain very positive in the auto sector as well. I do feel that the one thing that we haven't discussed is my negative view on China. I think, that is a bit of a anomaly there, what's going on. Prices have been deflating for the last 3 years. Real estate is a mess. The debt, the real estate imbalances, deteriorating demographics, and a worsening geopolitical backdrop. I'm going on a ramp here, but you get the picture.
No, point taken. Shiv, everything you say is, I completely agree with everything else. But as an old a veteran investor in Chennai told me a month ago, I was there, he said, great businesses, but even better prices. That's the problem for a lot of things, not everything. This gentleman I spoke to...
The challenge to that is India is seeing an inflow of both momentum of flow and the earning cycle has completely changed, since the last 2-3 years. So while valuations are creeping up, the earnings cycle is also holding up very well, which you saw in the latest earnings cycle. So yes, prices.
But is that so? I mean, if you look at trailing earnings, right? I mean, trailing earnings expectations, future earnings growth is fine. But I looked at fourth quarter earnings and what's happened to expectations, full year expectations after that. I looked at first quarter. I mean, they're in line. Actually, maybe in some cases slightly on the softer side. It's not as if the full big earnings growth, at least not on a trailing basis. Now, expectations is anyone's guess. But go on.
But I'll caveat that by saying that if you look at the earnings growth relative to what is happening in the rest of the region and developed markets, right?
That is
not
true.
even, so that investing is a relative game, unfortunately. So, and you're absolutely right. If you saw a stock at 100, it'll be difficult for you to buy at 120, at 50, it'll become harder, at 200, it'll become impossible. And that's what we have been seeing. But I'm telling you, the flow and a lot of cyclical and business factors that are coming into play to transform India in the next couple of years, I remain very bullish, and I continue to feel that the Bank Nifty indexes will continue to prop up. Yes, there'll be volatility along the way, right? Markets are inherently volatile, and the global backdrop is not as conducive to markets as it should have been. Cost of capital has gone up, and those narratives will not change. But the reality is that India finds itself in a very sweet spot. And you guys have made this comparison well. The J curve, when an economy goes from 3.5 trillion, right? So I think all those things will come into play. And I do, I'm not saying that we remain overtly bullish. And I feel that, yes, the right prices and the right stocks will continue to do well. But fundamentally, I do believe that India will continue to transcend all these global volatile, doomsday, negative global narratives and continue to outperform. Like exactly what you're seeing on the screen today. We are the only market in the region that's up.
We got a nice, strong, thick Teflon coating, right? And that is working very well. Just one thing, Shiv, since you track global markets, you mentioned that. Have you heard any rumblings around NVIDIA in the US? Because I've been reading something here and there. It becomes important because so much of the US outperformance has been because of NVIDIA. And I'm not talking about the 120, 130 times it trades at. There have been some other some are starting to point fingers at, but anything you've heard?
So I think I will answer that by saying that, it's gone up. It's a very large cap, 1.2 trillion now. And the reality is that to grow at that size and to continue to have the kind of wins that they had with the AI revolution and the chip space that happened in the last 3-4 months will be very difficult to replicate. And I do feel that we have probably seen the top of that, unless, of course, the global central banks start cutting rates aggressively on growth coming off and falling off a cliff, as what we're seeing in China. But I don't see that happening in the near term.
Okay.
I think there are better places to invest at these prices.
Got it.
As you rightly said.
No, absolutely.
Maybe India is one of those places that explains the enthusiasm and the optimism that Shiv is making. Even 0.0001% of that money starts coming here, and well, who's to say what happens next?
Well, Shiv, thank you very much.
Don't forget, just before you let me go on, the reality is that people talk about India being the fifth largest economy in the world, 3.5 trillion. But if you look at the top 10 economies globally, our per capita GDP is still far lower. We are at 2,600. China is at 13,500, which is, still 5x, 6x of us. So we have a long runway for the consumption boom in the country and the wealth creation to happen at the middle income diaspora level that we keep talking about. And that is what I think this time is different. As long as we don't do a self goal, and I don't think we will, the trend is only higher.
Well, it's always a good chat with you, Shiv. A great conversation as always. Thank you very much for your time here on CNBC-TV18. I just want to quickly highlight what's happening with Z. It's interesting because it's spiked up very sharply. And this is starting 250 or so. And from what, 200 and... okay, about 277 or so. It's gone up to about 285. Tomorrow is a hearing. And there has been... It's done well coming into this Friday when this matter on Mr. Goenka continuing at the company, at least the appeal, etc., will be heard. So watch out for that as well. We'll take a quick commercial break here. We'll come back, and as always, our short-term trading ideas coming up with our technical experts. Stay tuned.